This week's listener of the week is J&C Rush. J&C Rush, thank you so much for leaving us a 5-star review. And for those of you listening, if you leave us a 5-star review below, you might be next week's listener of the week. This week on Commercial Real Estate Secrets, we have Natasha Falcone. Hi, Natasha. Thank you so much for being on the show.
Hello. Thank you for having me. Looking forward to our conversation.
Yeah. So I met Natasha last year in Orlando at Beth A, not just any conference or summit, Beth Azor's summit for women investing in real estate. What does Beth call it exactly?
It's the Women Investing in Real Estate Summit.
Thank you. I knew it was some iteration of those words. Anyway, So Natasha has a really, really impressive story of syndication. And I get a lot of questions about syndication, how to do it. And I know we're going to bring you a lot of value here in chatting through Natasha's strategies and story. So thank you for being on the show, Natasha. Will you tell the viewers a bit about yourself, who you are, where you come from, what you do, and what you do today?
Of course. So I'm Natasha Falcone. What I do today is I am a multifamily real estate investor in the South Florida market, and I do syndicate as well. I am focused on having ladies investing in real estate, and where I come from is I started my career as a CPA, as an accountant in one of the big firms. Then I went to work for a client, which was a commercial developer owner of a few different asset classes. Started as their controller, and then by the time I left, I was there 18 years. I was the president of their company. And that's when we realized, and in speaking with my husband, we said, well, wait, generational wealth is a thing, legacy wealth is a thing, and we want to do this for ourselves. So in 2019, I started my own shop, if you will, my own company.
And by starting your own company, what did that look like? And what do you do? What does a day-to-day look like for that?
Yeah, I mean, I say started my own company, but what I really mean is I started focusing on investing in real estate for ourselves. And so, but opening the company is the first step that says, yeah, I started, I'm here. Now what do I do? Well, started looking for opportunities, looking for deals. And when I started, I was all over the place in the sense of that I didn't really know what asset class I wanted to invest in. I understood the different asset classes, but I didn't know where my, passion was or what I was interested in. And you're super passionate about your asset class, and I'll invest in that passively. I will never do it. So I had to find something for myself, and that was multifamily. So I started doing that.
So for somebody who doesn't know what syndication is, can you explain it in layman's terms?
Yes. So a syndication is basically when someone finds an asset, any type of asset, doesn't matter, finds an asset, and then they bring other people along with them to invest. But that one person is making all of the decisions for the asset, and that is the general partner or the sponsor. So there's different words used for that. And all of the other individuals are passive investors. So in a syndication, and then there's certain things that you look for in a syndication, but basically in a syndication, the person finds the asset, and then you go to your friends and family and you ask them to invest alongside you if they like the opportunity.
So say you want to be the general partner and you want to buy an asset and raise money from friends and family. How have you found the assets that you have since acquired?
So the way I have found the properties that I've purchased has been a few different ways. I have brokers that I have really good relationships with, and they've brought me opportunities, both that they've listed and that they haven't listed. So sometimes a broker will go to a potential seller and they'll say, well, I'm not going to list it with you, or list it at all, but bring me a buyer. And I've been really lucky that some of these brokers trust me and they know that they're going to get paid either way. So they bring me to the opportunity, and we've closed on opportunities like that. And then just calling owners as well. So those are kind of the ways that I've found those opportunities. I have right now 7 buildings in South Florida, in Hialeah and Little Havana, 2 markets that I'm very passionate about, and doing it.
How many units is that?
108.
I think we have 108 industrial units. So different world, but that's 108. Wow, that's unbelievable. So are you managing and leasing all of the properties yourselves, or once you buy the deal, what does it look like?
So once we buy the deal, the answer is yes. We do everything ourselves. Wow. Me and my team. I do cooperate. We cooperate with brokers. So we put it on the MLS and we put it out there on all the typical websites that you know. But if a broker brings us a great resident, we will take that resident. But if we get the calls directly, we do it ourselves as well. And we do all the management, because I believe that even though we buy C class and turn it into B, B minus, depending on what the asset is like, the way that you treat a resident matters. And I have found that when we do it ourselves, we give A class service. I believe in that.
I remember you talking when we were in person at the summit. You have sort of, for all intents and purposes, found a niche in Hialeah and Little Havana that is somewhat authentic to you in dealing with Cuban families. Am I?
Yes. Well, I'm Cuban.
Okay.
And I lived in Hialeah. So okay. I lived in not the same buildings, but similar buildings to the ones that I am buying and improving. And wow. So I understand the demographic. I understand how they live. I understand how we wanted to live. And that's what I'm creating for our residents.
And I remember you talking about how when dealing with owners of properties, like you said, having come from Hialeah or having family from Cuba, you have been able to relate more to owners in.
Oh yes, on the buy side. That's on the, like, once we're in on the buy side, I have. I mean, it's a beautiful thing that many of the owners that I've bought from, in some cases, they've had great properties. They did great for their families and they owned them for 20 plus years. And so they did a great service for the people that were there when they were there, but it's time to pass the baton. And so then that's when I'm able to not only relate to them as far as understanding what they did for their families, but there's a connection because I'm replicating what they did as far as the generational wealth aspect of it.
Wow.
And then in addition to that, and in many cases, some of these opportunities have no loans because they've owned them for as long as they have. I'm able to secure seller financing as well, which is, very beneficial for the returns on the opportunities.
Can you explain seller financing?
Yes.
For a new investor?
Yes, it's pretty simple. So instead of going through the process that we normally know of going to the bank is the seller. And so the seller sells you the building and they take back a note. And so the difference is that you're writing your monthly check to an entity or a person, or basically the person that sold you the building, as opposed to sending it to a bank.
So, you're very sophisticated. And I get a lot of questions. I get a lot of people who ask me, do you have videos about syndication? Where can I listen to a podcast about syndication? How did you learn all this?
Oh, I guess time, right? I worked in the real estate tax department when I started my career. I think I learned this and I didn't know I was learning it. That's the actual right answer. Doing all of preparing tax returns, working on planning, estate planning. So I started learning just by doing and by being grateful to be on the teams that I was on when I started my career. And so that's how I did it.
Yeah, I think it's so funny. There can be this analysis paralysis where a lot of people just want to read a book and learn how to do it. And then, they want the 10-step guide. But the reality is you have to just jump into the trenches, and you might not learn A, B, and C, but you might learn X, Y, and Z. And it's like you said, everything is cumulative to get you to where you are now.
There's a lot of great books, and I wish I would remember the one in particular that I read. It's about shopping centers, but it applies to everything. But I agree with you. In addition to reading, sometimes I tell people, if you want to learn about syndications, well, invest passively in one. No, find an opportunity that you like, invest passively, because that shows you, really, you're really looking behind the curtain, how the deal's put together is how the sponsor communicates, and then you can get ideas on how you would do it, or decide you don't want to do it.
So say I'm listening to this podcast and I want to find a sponsor. How do you find deals as a limited partner to start?
Wow, that's a great question, because I would never want to say, get on the internet and start finding people. It's like you have to put it out there. You have to put it out there. talk to people, meet other people that maybe have done it. Most importantly, because you can find many people that are doing what we do, I would say get to know the sponsor. So if let's say you see somebody online and you really think that they match your criteria or they match what you feel you would want in an opportunity, I would say reach out to them, talk to them, maybe see if you're a match on all fronts. People, first you look at the sponsor, then you look at the deal.
It's so funny. Last year when Beth was raising money on a deal, after having met her and talked to her, it was a no-brainer. But then when I was explaining to people at home, it was like, this is a woman I met on the internet. And it was like, wow, that is like such a crazy thing to explain to my father, who's like so traditional. And he's like, you're giving money to a lady you met on the internet? And it was like, no.
Like, meet them on the internet. I'm just saying, like, don't blindly send money to somebody. But actually, that's a great example. You met her on the internet, then you spoke to her a few times, and you were at her event. So, like, you developed a relationship. That's actually a textbook perfect situation.
And that's why, to me, it made complete sense to do it, because Beth comes with receipts and trust, and I just could talk all day about how wonderful that woman is.
You're not kidding. You and I both.
So before we go into Beth's summit, which I know was last week or the week before,
2 weeks,
there has been this joke on the internet about GPs, people raising money in 2020, 2021, and 2022. And now they might be having issues. Can you explain the problems that we've seen in syndication as of recent?
You know, there's so many different things that have happened, but I think what has caused the main problem is the changes in interest rates, because you heard all these great stories, IRR 20 something, our returns are fabulous and we're in the 20 range and our averages are this. And then when you look a little deeper, they were doing deals from 2020 to 2022. Well, a lot of people were making those kinds of returns during that time where we know where the rates were. And if you got floating rate debt and you thought rates were going to stay that way forever, and that's how you underwrote your opportunity, then you're in trouble. And if you're in trouble, then now the opportunity's in trouble. And depending on what kind of GP you are and how you communicate and how liquid the opportunity is, things are going bad. A lot of GPs are making capital calls or tossing keys back to banks. It's happening.
Can you explain how to make sure that your partners that the risk is mitigated for your partners when you are putting together a syndication?
I always like to say the risk is always there, because an investment is an investment. So we all know that the business that we're in has risk, just like any other business that you're going to get into. But I also believe that if you underwrite things in a certain way, that you're able to ride through the bad times, because there's always, if you look at the cycles and you just study the last 30 years, there's always ups and there's always downs. And they just maybe look a little different, but they're always there. So what do? One thing I do, I don't do floating rate debt. I pay a little more up front, but we know what this is going to look like. So that's one thing that I think I would look. So if I was an LP, or when I invest passively, these are the things I look at. What does the debt look like? How long is the debt? How are we going to improve the property? And is there really money to improve the property? Are we using cash flow from the deal? Well, is the opportunity something that we're saying rents are going to be X, but we know that's not what the market's saying? We're guessing. I saw an opportunity once that they underwrote late fees, and for 10 years, they raised it for 3%, and then they capped it at the end as, so $500,000 of the value was late fees. I'm like, so we're going to buy a property and our tenants are going to suck for 10 years.
That's crazy.
Wow, what? No, you underwrite. You never underwrite that, and you do things assuming that you're going to do a good job with the people or businesses that you put into your deals.
And I deal more in the industrial space, which is very different than residential. I've heard residential, since the pandemic, has had higher evictions, all-time evictions, and less rent growth overall. Have you experienced any of that in your market?
I think it depends on the market. I think that's another thing that I think is very important. There are, we'll see studies, the country is 5% higher, 4% lower, whatever it is that is going on. When you're investing, you need to look market specific. So I have not had any issues with receivables. I'm not telling you we don't have that from time to time, the tenant that, something happens and we have an issue, but for the most part, we have not had And then as far as rent growth is concerned, it has flattened a little bit, but it's still doing well. It's still doing well. Now it all depends. How did you underwrite it? Did you underwrite at the top of the market and then created that growth in your underwriting? Or did you underwrite a little lower than the market so that if it's a little flat, you're okay? And that's part of like it kind of weaves itself into what you were asking me before, but you see how it's all interrelated.
Oh, it's a matter of being conservative in your underwriting versus being aggressive. And I see it with offer memorandums all the time where brokers get really creative in, for all intents and purposes, underwriting late fees.
Yeah.
Really creative in lying. Ultimately, it's just lying and trying to fabricate and boost numbers on the deal. And you have to be able to spot that.
Yes.
Ideally before you go under contract, but at least in your due diligence. Do you have any indicator, like red flag indicators that just raise the hair on the back of your neck when you're looking at a deal?
As far as the underwriting, no, because I do it myself. I accept what you provide me, but then I do it myself.
Yeah.
So there are things, I guess, if, on the repairs and maintenance side, depending on how old the building is, if I know there's certain things that are going to need to happen. A roof is a big one, but there's nothing, I would say, out of the ordinary when you're buying a building that you would say, oh, I was tricked here. No, you need to do your due diligence. You need to make sure that if you're buying the building, that you have the right professionals with you during due diligence to check the building and make sure. And I think if you do all of that, again, nothing's guaranteed, but you should be okay.
Hey, I love it. I think it's super valuable. I always learned my dad is a syndicator. He was a syndicator. He's still with us, but he's over it. But, he always came from the same standpoint, which was always do good by your partners, right? If you never ever want to do a capital call, you never want to underwrite aggressively, because if you lose money for your partners, they'll never be your partners again.
Right.
Whereas if you make your partners money, you have partners for life.
Yep.
And so I think it's so interesting, this phenomenon that we talk about of syndicators jumping into the market in, when interest rates were 2.5% and looking like superheroes. But then when I'm trying to think of they say like when your pants fall down or when the curtains fall down, you don't have any pants on. When the interest rates flop, these people who were looking like superstars now, like you said, are returning keys to the bank, calling their partners for more money. And that's
still charging fees, still getting paid. And here's another one. Here's another one for the question you asked before. Make sure that the syndicator has money in the deal too. They need to have skin in the game so they're aligned, as opposed to many that don't. And so they're making fees and they don't have any skin in the game. So what's the benefit of trying to save the opportunity?
Right. So if somebody who's listening right now doesn't know anything about syndication, can you explain the fees that you're talking about as a syndicator?
Yes. So as a syndicator, there are many fees that are charged because they're a part of doing business. You find a deal, you get an acquisition fee. There's a disposition fee. There's construction management fees. There's property management fees. There's asset management fees. And that's, I think I listed 4 or 5. I think the way to approach it is not to say, oh, there's too many fees in the opportunity. I think the way to approach it is to say, if this syndicator charges these fees and this is what they charge, well, what does the opportunity look like with that? And are the returns that I'm willing to accept and that I like? And then it's fine, because syndicators should charge fees and they all do it different and they all charge different fees. You just need to know them. The most important thing is for you to know what they are.
It's so funny because when it comes to syndication fees, it's like the Wild West. I've seen there's not a one size fits all. I mean,
there isn't. I mentioned 5, but if I were to sit down, and I should probably do this, I'm sure you could find a list of like 100 different types of fees. And it doesn't mean that it's wrong. It just needs to be disclosed. You need to know, because that's really where I think that the issue is, that many times all those fees exist in the opportunity, but they're not disclosed anywhere and you don't even know they're being charged. So that's also a question that you want to make sure, if you're going to participate in a syndication, ask, what are the fees? And if they don't want to share it and say, because I list them in my offering memorandums, here are all the fees. And if they don't want to share a red flag, you need to decide if that's something you want to be a part of.
Yeah. I think it's something people don't realize is an aspect of it. Syndication is, you're right, it is work to acquire a deal, and the syndicator should be paid. It's just a matter of, like you said, trusting the syndicator. Yeah, trusting it, making sure those numbers underwrite appropriately, and making sure they have skin in the game, because if they don't want to put out their neck for their own investment, like you said, red flag.
Yeah.
So with your syndications, do you have any strategy to sell eventually, or are you a buy and hold?
No, I'm a long-term holder of real estate.
Yeah.
We're not selling. I think you know a little bit about that.
I know. You get like the defensive that I get when people call me, and it's like, just save your time.
Oh, my strategy is I'm not a seller, but I'm a buyer. So call me with the deals that you're going to... other deals.
I'm going to go off on a personal question. Do you do depreciation on your properties and for every property every year?
Yeah. Is that personal?
It's not personal, but it's a little level 2.
I do cost segregations on our properties and do depreciation as the cost segregation states.
Okay. For all the listeners listening, we could talk for an hour about cost segregation, and I did on a few episodes back. So go listen to that one, and we won't bore you. But cost segregation, for all intents and purposes, it's tax saving strategies that Natasha could probably speak more eloquently about than I could.
It's accelerating depreciation. You're allowed to depreciate your property different lives depending on different things. We won't get into it, but it's basically the tax code allows you to accelerate it.
Thank you for simplifying that, because it's obviously a huge necessary evil in investing in real estate. Not evil, but it's just a little complicated. Anyway, so last week or the week before, you were at Beth Azor's Women Investing in Real Estate Summit, and I want to hear all about it.
Oh my gosh. Okay.
Yes. And if there were any deals, did you bring any deals? Did you invest in any deals? How did it go?
So the summit was fabulous. There were almost 200 ladies there, all ready to invest in real estate. The best part about that conference is the vibe of the ladies all wanting to help each other. You can walk up to anybody in that conference and you are gonna have a relationship like immediately. It's incredible. And of course, it all starts with Beth. She brings the vibe and we all just, go with it. And it amazing in that way. In reference to, I didn't bring a deal. I need a deal. I have no deals. But there were a lot of conversations about opportunities in general that people are looking at, why deals are not being done. So it was all real estate talk and speaking with the ladies that are not investing in real estate and having conversations on what's holding you up and let's get you there. How can we help you get there? And then seasoned ladies that were talking about the opportunities that they already have. I didn't see any deals. That would have been fabulous. But I think that the time and the way the market is right now created that not being able to happen.
Sure.
At least for me.
Yeah, no, it's a fascinating market, but I think people are waking up. 2023, people were really sleepy when it came to, in our market, to selling and buying. Mm-hmm. We're starting to see more people come out of hibernation, so I think there will be more deals to be had.
I hope you're right.
So if you are in Hialeah or Little Havana, is that Miami? That's South?
It's Miami. Yeah, it's South Florida. It's not Miami proper, but it's South Florida.
Okay. And you have an apartment complex you're looking to sell. Call Natasha up.
Oh, yes.
So this is my last question that I ask everybody.
Okay.
What is currently making you happy in real estate?
I'm so happy in real estate that it doesn't matter what day of the week it is. I'm happy to work any day. I'm happy to do things every day. But what makes me the most happy, besides the assets doing great and good returns, what really makes me the most happy is what we're doing in these properties and how we're improving people's lives by giving them great places to live. I just actually handed the keys to these 4 girls that all work in the same place. And they couldn't find a place to live. And I just finished renovating the unit and I handed them the keys this morning. And when she walked into the unit and she saw it, she's like, I can't believe I get to live here. And I was like, you have made my day. That is exactly what I want. And it's not that it's like over the top. It's just pretty and clean and looks good. And we take care of the property and that matters. That's what makes me happy.
I know everybody says landlords are evil, but there are these enchanting moments like that, where you realize that you are helping people and giving them an opportunity and taking a chance on them, that you're right. It's like it makes your whole day, week, year, because maybe the person next door wouldn't have given them that chance. And some people really, really appreciate it. So
I think so. And I don't think landlords are evil. I think there are evil landlords, but there's a lot of good ones.
Hey, it sounds like that might just be like everything else in life.
Right?
So, well, Natasha, I really appreciate you being on the show. For everybody listening, where can they follow you online? I've seen you really step up your internet presence game recently. Where can everybody follow you?
I'm trying to keep up with you, Aviva.
Yeah.
So you can find me on Twitter or Instagram. My handle's Nat Falcone, N-A-T Falcone. And if you ever have any questions about investing in multifamily or syndications, or I can help in any way, DM me. I love to talk about it. I love to help others get into the game too. So I'm here.
Thank you so much. And for those of you listening, we'll see you next week. Ready to shatter your glass ceiling while creating legacy and financial freedom? Head to my show notes for our free guide, How to Get Started in Commercial Real Estate.